Good evening, ladies and gentlemen. Today is January 22nd, and we're having our daily market review. This was a shortened week. This is a shortened week. Monday we had a Martin Luther King's Day, and yesterday was impacted by the news from China about Chinese virus. And as a result, the market was trying to sell off, trading like in a minus territory most of the day. But towards the middle of the day, the Nasdaq was showing some strength. And as we can see from yesterday, we can see that most of the technology names were on the upside, while small cap companies were in a minus territory. We can see that Russell 2000 index closed down 1.13%, increasing the gap between growth and value companies even to the larger extent. If we look at the winners as of yesterday, we can see the traditional names, traditional growth companies such as Shopify. This was one of the winners. The stock is up also today. The stock is basically trading at its maximum. And we can add to that companies like Roku, which extended its services to Brazil. The stock was up $6. And all of those companies that were moving the market up last year, they were strong yesterday. But the value companies continue to trail. Why is it happening? Because the investors are buying the stocks that's going higher. Because, for example, if they buy something that looks attractive according to the value, and the stock is not going anywhere, while they would stay in this company if they could make money by buying momentum growth stocks. So that's why they're not buying them, and they're buying stocks like Tesla, like Apple, like Shopify, and the company, like we can see, like Tesla, just from being 200 something dollars 6 months ago, it doubled, and it's continued to grow. Like yesterday was up 7%, today up 3.53%, and this company still is not making any money. So that's what that's absurd situation in the market, because the companies with no earnings, they're moving higher. The companies that trading with a PE ratio lower than 20, the value undervalued companies, they're not going anywhere. That's the situation in the market, and we can't do much about it, because only thing we can do either to stay away from the market by waiting when the common sense will come back, or we have to buy those growth companies and ride them until they're going. Like we're riding the horse until the horse is moving. Once the horse will stop, we'll get out of the market. That's going to be very drastic. It's going to be very destroying when the horse will stop, because we can see the rest of the market going lower. So we should stay in the market and ride it while we can. But once the movement will stop, eventually it will stop. We have to get out and just start shorting the market. Every time we see some negative news hitting the tape, we're thinking this is a what? This is a news we think that will move the market lower. But the virus is not that serious, although we can see some cases in the United States of that virus, because a lot of Chinese traveling to the United States, and we can see that some instances of this virus in the United States. But today, once we got the news, the US was able to to cope with the situation. The market is continuing to go higher, and we see that if yesterday was just very minor moving on the downside, today we see like twice as much movement on the upside. So that's what it is. It's like we're trying to hold on the water flow, and once we move the thing that stops for water from moving out, the water continue to move further. So that's what it is, and that's what's happening in the market. I understand there is no common sense behind it. The market is due to sell off, but we won't see this sell off. We won't see it in the long run, because like those Ponzi schemes, that's what they call this market today. They call it the Ponzi schemes. Those Ponzi schemes are running until everyone is involved, until they're just getting so much money into this scheme, and once it's like enough suckers sucked in, then the Ponzi scheme will be over. To get prisoners. They're getting prisoners and then they execute them. That's how the things are working. So this is a Ponzi scheme. I understand it. A lot of people understanding. They basically calling it that way, but we can see that people are willing to play along the way, and they are willing to not to sell their stocks on the way up. So that's what basically happens. Maybe another situation that I think is taking place when they trying to ride the market higher. So those guys who've been buying those stocks earlier, they could sell them on the way up, because if they're trying to sell it on the way down, it's going to be disastrous, because it's going to cause a huge sell-off. But selling it on the way up, it's always easier, and that's what they're probably trying to do, because those people have a huge positions in such names like Tesla, like Apple, like Microsoft, and they're trying to ride the stocks up just to sell it on the way up, so not to cause any damage. So this way the things are going. The earnings season is still on its way. Right for now, we only have financial companies reporting, but today we had two reports from the market leaders, including IBM and Netflix. IBM slightly beat the estimates. Let's see how the stock reacting to the news. Hold on one second. IBM. This company normally is not reacting properly, but today we'll see it's up $5. So that's going to have major impact to Dow Jones, because IBM is one of the major contributors to Dow Jones. And the next one is Netflix, and the stock was trading on the downside yesterday after the initial report, and we can see right now the stock is up. So it's up because basically it beat like the estimates on all possible ways, on sales, on earnings, and on number of subscribers. The only question mark was high margin subscribers was trailing to initial estimates. So that's why we're seeing those stocks probably contributing to the major indices, and we might have like a good update today. And starting tomorrow, we're gonna have more of a more of different industries reporting. We'll see some semiconductor companies reporting. We'll see some industrial companies reporting, and we'll see how the rest of the earnings will go. Right now, we see certain strengths in home builders, which were actually which was a trailing group at the end of the year, because we saw some weakness in housing starts and in construction permits, but Friday's numbers showed the strength back to the sector, and yesterday, despite the market negative, being on a negative territory, we've seen some strength in home building companies. Home building brings back the construction companies, material companies, which benefit from the construction activity. So this way we can see some positives in those areas. Other than that, we see a real strength in the semiconductor stocks. This strength has been started like in early fall and still continuing. We can see the stocks like AMD, like MU, Intel, those all breaking new highs. We can see AMD is up again and it's trading on its high. We see Intel, which broke through $60 level and stays there. We see Intel is on an upside. We can see Micron is going higher, and the rest of the stocks, I can say they also acting the same way. I can show you one stock which was acting really strong yesterday. This is Lattice Semiconductors. The company was up in a big way the day before. It's still trading near its all-time high. And that's what it is. That's what the market is doing, and the market is really strong. And that's we see the strength in the technology. We can see the strength. We can see the strength in pharmaceuticals and biotechs and medical technology, in home builders I mentioned. The only strengths we don't see it's in retail area, because retail is still a question mark, because online retailing is beating like brick and mortar retail stores, and we see some weakness in REITs, which are renting the commercial space to retail stores. And other than that, we're seeing the market like pretty strong, and we see a lot of companies trading above 200-day moving average, which actually comparable to 2004, I think, which then was like the largest numbers of companies traded above 200 moving average. But everything still indicates that the market is in overvalued territory, and we can expect correction. When the correction will come, this is a big question mark. It could come tomorrow, it can come next week, it might not come at all. But we can see the market is trading like Dow Jones above 29, S&P is already 30 points above 3,300, and that's above above the most optimistic expectations for the market for the year, because that market is already at the point where most analysts thought that that's where the market would be at the end of the year. Market is already there without the months of January being completed. So that's what it is. Like a lot of too much optimism in the market, and I think it's gonna end in pretty ugly way. When, it's a big question mark. We don't know, but we have to be ready for that. That was Simon Braginski with the Daily Market Review. Thank you for your attention, and goodbye.